Welcome to our comprehensive guide on U.S. tax filing statuses. We're about to demystify taxes for you, breaking down the complexities into bite-sized segments. We'll explore the various filing statuses, delve into deductions and credits, and provide a simplified overview. It's a hassle-free guide that strips away the confusion of taxes. So, get comfortable as we embark on this journey to simplify the tax landscape for you. Ready to dive in? Let's get started. Hello and welcome to TaxCom, your ultimate tax guide. A beacon of tax simplification, we delve deep into a wide array of U.S. income tax topics, offering insight and understanding the U.S. income tax system, and more. Our content equips you with the essential knowledge to swiftly maneuver your way through the tax filing season. We staunchly believe income taxes shouldn't be a baffling puzzle. With the right knowledge and tools at your disposal, you can glide through the tax landscape with ease. Remember, at TaxCom, we regularly roll out new videos chock full of useful tax information to aid you in successfully minimizing your tax liability. Before we dive into the different tax filing statuses, let's take a moment to understand a crucial aspect of tax filing: the difference between standard deduction and itemized deductions. The standard deduction is a fixed amount that reduces your taxable income based on your filing status. On the other hand, itemized deductions allow you to list eligible expenses to lower your taxable income. This could include expenses such as out-of-pocket medical costs, mortgage interest, state and local taxes, and charitable donations. Both have their benefits. Deciding between them depends on your individual financial situation. Understanding these deductions is crucial as it directly impacts your tax obligations and potential refunds. Now that we've laid the groundwork, let's delve into the world of tax filing statuses. Do you know the different tax filing statuses in the U.S.? It's a question that might seem simple on the surface, but understanding it can make a significant difference in your tax obligations and refunds. Today, we're breaking down the 5 primary tax filing statuses recognized by the IRS, comparing and contrasting them to give you a clearer picture. Additionally, we'll cover the enhanced standard deductions for seniors, an important element in the U.S. tax system that provides seniors with increased deductions, further reducing their tax liability. Kicking off our list is single. This one is fairly simple to understand. If you aren't married, divorced, or legally separated, you belong to this category. The single filing status has stringent tax brackets and a lower standard deduction. For 2023, the standard deduction for single filers was $13,850, and for 2024 it is $14,600. However, if you're a single taxpayer who has a dependent under your care, your situation may differ. This leads us to head of household. This status is for single taxpayers who shoulder more than half the costs of keeping a home for themselves and a qualifying individual. This could be a child, a parent, or another relative. The major advantage of this status is that you are eligible for a higher standard deduction and more favorable tax brackets than single filers. As per the 2023 standards, the deduction for head of household was $20,800, and for 2024 will be $21,900. Next up, we have married filing jointly. This status is for married couples who choose to consolidate their incomes into the same tax return. This often culminates in a lesser tax bill, due to broader tax brackets and a larger standard deduction. In 2023, the standard deduction for those opting for married filing jointly stood at $27,700. Tax year 2024 will yield a $29,200 for this status. Yet, it's crucial to remember that both spouses are equally liable for the tax bill and any potential audit. On the flip side, there's married filing separately. Here, each spouse files their own tax return, taking responsibility for their own income, deductions, and credits. In 2023, the standard deduction for married filing separately was set at $13,850. While this might seem less advantageous due to higher tax rates and fewer tax benefits, it can be a strategic move in certain situations, such as when one spouse has significant medical expenses or student loan debt. At last, we arrive at the status of surviving spouse. This status is designated for taxpayers who have lost a spouse in the past 2 years and have a dependent child. This status allows them to benefit from the same tax brackets and standard deduction as those married filing jointly, offering significant tax relief during a challenging period. For 2023, the standard deduction for a surviving spouse was set at $27,700. The tax year 2024 surviving spouse will be $29,200. To summarize, each tax filing status has its own set of rules and benefits. Single and head of household are for unmarried taxpayers, with the latter offering more benefits for those supporting dependents. Married filing jointly and separately are for married taxpayers, with the choice depending on their combined income and individual financial situations. Lastly, surviving spouse provides financial relief for those who have lost a spouse and are caring for a dependent child. Did you know that qualified seniors and the legally blind get additional standard deductions? Yes, the IRS offers increased standard deductions for taxpayers age 65 and over and the blind. For 2024, the single senior edition is $1,950. The 2024 head of household senior filer also deducts an additional amount of $1,950. For married filing jointly, if one spouse is 65 or older, you get an additional $1,550. If both spouses are 65 or older, this increases to $3,100. And if you're married filing separately, each spouse aged 65 or over can claim an additional $1,550. So if you're a senior, make sure to take advantage of these additional deductions. It's a valuable benefit that can reduce your taxable income significantly. Understanding the nuances of each tax filing status is key to making informed decisions about your taxes. Hey, remember, the goal is not just to reduce your tax bill, but also to maximize your potential refunds. So, take the time to understand these statuses and, if necessary, consult with a tax professional to determine the best option for you. Before we wrap up, let's clarify a common point of confusion: the difference between tax deductions and tax credits. You see, tax deductions reduce your taxable income. They work by lowering the amount of your income that is subject to tax. For example, if you have a taxable income of $50,000 and deductions worth $10,000, you will only need to pay tax on $40,000. On the other hand, tax credits are a direct reduction of your tax bill. They subtract from the amount of tax you owe dollar for dollar. There are several popular tax credits that you might be eligible for. These include Earned Income Tax Credit, which is for low to moderate income working individuals and couples, particularly those with children. Then there's the Child Tax Credit, which can be claimed by parents or guardians of children under 17. And let's not forget the American Opportunity Tax Credit, which provides credit for qualified education expenses for the first 4 years of higher education. So if you owe $3,000 in taxes and have a tax credit of $1,000, your tax bill reduces to $2,000. Understanding the difference between tax deductions and credits, as well as knowing the tax credits available to you, can help you maximize your tax savings. After all, a dollar saved is a dollar earned, especially when it comes to taxes. So remember to take full advantage of both these tax-saving tools when filing your return. We will unpack tax credits in detail in an upcoming video. Did you find this guide helpful? If so, don't forget to hit the like button and subscribe to our channel. We have a lot more tax-related information coming your way. By turning on notifications, you'll be the first to know when we upload our next video. Remember, understanding your tax filing status is one step closer to a stress-free tax season. Stay tuned for more tax-related information and, as always, thanks for watching. And with that, we wrap up another informative session. Thank you for spending your time with us today. We hope you found our U.S. tax filing guide valuable. Stay tuned for more tax-related information, and remember, knowledge is power, especially when it comes to taxes. Until next time, stay informed, stay savvy, goodbye.